Hello, I'm Mi-jin from the American Embassy University. Today, May 7th, we begin the American Stock News. Today as well, I'm Mi-jin, keeping you updated on the trends of American stock investors without any changes. I've been running the Mi-jin channel for about 5 years now. So now I see that there are a lot of subscribers who feel like real family to me. Some of these people have joined the paid membership as soon as I started running it. When I came to Korea, they attended my online lectures, participated in my lectures, and when I published a book, they bought my book and supported me. So up until now, these are the people who have supported me and made it possible for me to walk this long path as an influencer. But when I see it that way, even if these people leave comments on my YouTube channel, I honestly don't feel as much interest as I used to. Among these precious subscribers, there is someone who always leaves comments under the nickname Ja Euro Anyang Heong, and I want to answer one of their questions. I run a business, and my wife, a National Pension Service member, is nearing the end of her term. She wants to know if she can still get the 50% spousal pension benefit after her term ends. A few months ago, I posted a detailed notice about this, but now the Yuan membership of the All-in-One membership is no longer being operated. Now, only the monthly membership is available for purchase. I don't think I've ever explained this reason before. So you might be curious, so let me explain in detail. Right now, I'm living a bit frugally. I just go about my daily routine. I wake up in the morning and start my day. And except for the time I take to eat or go out for a walk or exercise, that's pretty much my daily life. So sometimes it feels a bit stifling. I started to wonder how long I could keep living this kind of lifestyle. Recently, even doing broadcasts like this or running my membership site feels like a burden to me. Continuing to run the membership while doing everything else is honestly a tough challenge. For a whole year ahead, I have to keep providing the same kind of content, and I feel a sense of responsibility to keep delivering quality content to the members. So, for that reason, if it's affordable, I want to run the membership in a way that allows me to work freely and comfortably. That's the kind of mindset I've developed. Anyway, this time I decided not to offer a guarantee for Malaysia. So, in a way, my life's direction is gradually becoming more flexible, and that's what I've been thinking about. So, I hope I can regain my confidence, and if I keep exercising diligently in the future, I hope my body will recover and I won't feel any more discomfort. I'll try my best so that I can perform as an actor again. Until then, Young, I know it's a lot to ask, but if you could continue as a regular member, I'd appreciate it. Afterwards, if we are able to resume the annual membership promotion, I will make sure to notify you in detail. And for your reference, today is Wednesday. Next Sunday, both promotions will end. The first one is the 50% discount event for choice stocks, and the second one is the sale for the annual membership on the Seating Alpha platform, which will also end this Sunday. So, if you were interested, I recommend you take advantage of this discount event. Personally, I recommend that those of you who have joined the Million membership, Seeking Alpha, or Choice Stock, or any of these platforms, continue your investment journey with a consistent approach. Let me put it this way. Previously, I gave a lecture about the importance of logic, and I want to emphasize again that making investment decisions based on logic is extremely important. The point is that making decisions based on vague thoughts or emotions is not the right way. Logic is crucial because when stock prices rise continuously, it may appear unproblematic, but if your reasoning is unsound or your conviction falters, anxiety can arise. People who make decisions based on logic don't get shaken easily because they know exactly why they are investing in this stock. The benefit of making rational decisions is that even when the market fluctuates, those who made such decisions remain steadfast and unshaken. If your logic is broken, you might end up buying stocks without any hesitation, or you could panic and sell everything. The point is that you can make decisions quickly and easily in a rational way, and if you keep making rational decisions, your chances of success will naturally increase. So, in order to make rational decisions, it's important to have clear grounds that everyone can understand. If it's not a numerical analysis, then a logical explanation is necessary. For that reason, I want to introduce you to a concept called Hamadi's Corner, which is a famous part of the online member boards. If you look at it, it's not just simply stating my opinion, but rather I am logically and systematically explaining the reasons why I think this way. If not, in the case of a cheating panel, we provide a common admission test score, and on the test of English for International Communication test, there is a SMART score. By analyzing the Fed model like this, you can see how undervalued each industry is, expressed as a numerical value. Based on these numbers, you should make rational investments so that you don't get swayed and can make solid investment decisions. That's how I make my judgments. So, before this main Sunday lecture, if you join several necessary membership groups and continue healthy investment activities, that would be great. Now, let's get started right away with today's United States stock market news for May 7th. Today as well, I will organize the current situation of the United States stock market for you. Yesterday, I watched all three major indexes fall, and even the S&P 500 closed lower. Most of the sectors are marked in red, and the few green ones are very limited. The market's atmosphere wasn't very good, especially with healthcare dropping a lot. Decisively, when Vertex announced that it was abandoning its ongoing clinical trial in the pharmaceutical sector, Vertex's stock price dropped by more than 12%, and many other stocks also recorded sharp declines. In cases like yesterday, the market's volatility must have been quite high. But for now, it's holding above 50. Yesterday, it dropped from 53 to 69. And then the typical rebound stocks fell as much as 36.97%. Next, let's look at volatility. VIX hasn't gone up much either. It's staying around 24 to 28%. The Fear and Greed Index remains low compared to previous levels and has not increased significantly. Currently, the market is shifting more toward fear than neutrality, so it's becoming a more fearful market. That's how you can see it. Lastly, the max score provided by Choice Rank usually stays at a certain level, but let's click here to take a closer look and check it out together. Right now, the market is maintaining a bullish trend, as I just explained. Please click on the investment strategy once as well. Right now, it's a normal stage, but let's listen to some advice on how our investors should proceed with their investments. In the normal section, the scenario is divided into two types of investment strategies. The first scenario is, in a bear market, when the price is falling in a normal stage, you either hold or buy more. On the other hand, the second scenario is, in a bull market, when the price is rising in a normal stage. Cautious buying should be carried out carefully for selected items. These are the two scenarios that exist. Right now, the market score has risen from the fear stage and continues to go up. So, right now, you should either hold on to the stocks you have, or, if not, this is a time when you can consider additional buying. That's the advice being given in the current choice star market. Next is the performance of the United States original top picks. Recently, all three major indexes barely rose by 1%, so the performance of the United States original top picks wasn't that great. There are as many as 8 rising stocks. 5.60%, 4.30%, and 3.43%. Overall, Talon Energy and Vistra, these artificial intelligence-related energy stocks performed well. The reason is that yesterday, Constellation Energy, which is a different category, announced its earnings. And as it showed very good results, its stock price surged by 10%. So Talon Energy and Vistra also rose for the same reason. That's how you can see it. Next, S&P 500 futures are up 3.06 pro shares. Ultra Bitcoin Exchange Traded Fund is up 1.29 and 0.47%. Trade Desk is up 0.23%. Bitcoin rose 0.17%, surpassing $97,000. Other sectors were all down, while strategy fell by 0.24%. Nvidia 0.25, Broadcom 0.31, Intel 0.44, Alphabet 0.60, Amazon 0.72, Tesla 1.75, AMD 1.96, Meta 2.00, Credo Technology 2.09, and Taiwan Semiconductor Manufacturing Company 2.34. Finally, Palantir announced its earnings, and then we saw the stock price drop by 12%. The first prepared article is about the stock market. Today, in just one morning, many people have read articles with a rather negative outlook. When the market's atmosphere is good, I tend to read a lot of positive articles, and when the market has been rising continuously for a while, I sometimes read a few negative articles as well. That way, we can maintain a healthy investor mindset while operating in the stock market. Now this time, let's listen to the negative outlook on the S&P 500 index. According to this outlook, even if the Trump issue is resolved, the United States stock market could fall again as a new low, so they're presenting a negative outlook like this. First of all, let me briefly explain who Paul Tudor Jones is. He is a pioneer of macro investing, studying how factors like the global economy, politics, tariffs, and finance impact the market. In 1987, during Black Monday, he recorded a return of 125%, accurately predicting the market crash. He is a famous investor known for this achievement. That's how you can see it. He has quite an impressive track record. So who is this famous investor Paul Tudor Jones? Even if the Federal Reserve drastically lowers interest rates, the United States stock market will become a new low point, he predicted in the past. On a Consumer News and Business Channel interview, who is this legendary hedge fund manager, Paul Tudor Jones? Trump is focusing on tariffs, while the Fed is not focusing on interest rates. So this is not a good situation for the stock market, he explained. Even if Trump lowers tariffs on China by up to 50%, we are likely to move to a new low, he emphasized. As President Trump announced his plan to strongly expand tariffs on China, the S&P 500 index fell by about 19% from its high in February to the beginning of April, coming dangerously close to the bear market threshold. It typically needs to drop over 20% to be deemed a bear market, which is how close it came. After that, President Trump temporarily suspended some tariffs on China for 90 days. Also, by exempting some electronic products, the market recovered most of its losses. Nevertheless, there are still concerns that the 145% tariff on most Chinese products is not being lifted. China is applying a 125% retaliatory tariff on American imports. In this situation, Jones argued that lowering tariffs in advance, as Truman did, would greatly boost economic growth, as it did after the 1960s when the world saw the greatest period of economic prosperity. This is what he pointed out. Even if Trump lowers the tariffs to 50% or even 40%, it would still amount to the largest tax increase since the 1960s, he explained. President Trump is using tariffs as a means to strengthen the United States economy by imposing continuous financial burdens through tariffs. But that's the reality. The Fed has completely reversed its previous stance of gradual normalization and is warning that we may not be able to return to a new normal of low interest rates, and that if the new normal takes hold, difficult days may lie ahead. At the beginning of this year, there were warnings that the financial market's instability would intensify compared to the first Trump administration. He warned that the stock market had become overvalued over the years and emphasized the need for adjustment. In reality, we experienced a surge of over 18%. According to the latest announcement, is his company Tudor Investment Corporation. He continued to increase his investment in Indian stocks in second quarter 2024, and as many of you know, Nvidia's stock price is showing signs of volatility after early 2025. Therefore, selling Nvidia stock was a very appropriate and timely response. This is how we can make a profit. Now let me explain with a simple example. Earlier, I said that we need to make rational investment decisions. That's what I'm trying to say. According to the articles we've read, the stock market in Poland and China has recently been influenced by quite a few logical factors. So, it's important to clearly refer to reliable sources when making judgments. However, despite that, the market is made up of many variables that interact with each other, so it's limited to interpret things from just one perspective. Our investors are curious about how the market will react after today's Federal Open Market Committee meeting ends and what direction it will take next, and how the issues that have been pointed out as structural problems in Ukraine will develop. To make a comprehensive judgment, it's important to directly examine various indicators, including recent industrial performance, the latest economic indicators, and other key indices that have been announced. It's the same in a rapidly changing environment like now. Even when the market continues to rise, or even when it temporarily adjusts, it's important to be able to continue investing with a stable mindset. Therefore, consistently maintaining cash reserves is extremely important and crucial. I want to emphasize this point once again. For reference, Paul Tudor Jones recently received investment funds. Honestly, I don't think it's a good sign. The top 20 funds currently focused on by this expert have an average annualized return of negative 3.85% over the last 3 years. So, a negative 1.3% annualized return is actually a rather disappointing performance, and even the top 50 aren't doing much better. Over the past 3 years, the return is only 0.3%, so it's pretty much the same. So, when you look at the recent returns, you can see that the sense of disappointment has grown a lot, and that's how it appears. This time I'll take a closer look at the top holdings of Paul Tudor and Jones. As mentioned earlier, when examining the top holdings, Bitcoin ETFs account for the majority, ranging from 76 to 81% of the total investments, making it the most concentrated position. Recently, their confidence in Bitcoin has increased significantly, which you can also confirm. In addition to that, IVB is an exchange-traded fund that tracks the S&P 500, and if you look right below, you can see that they are also investing in IWM, which tracks small-cap stocks. Nvidia is here, although it made up 36.6% of the portfolio, and even though it's a large portion, Nvidia is still included in the top 10 holdings with the highest weight. You could check this part. Amazon's share has grown significantly, while Nvidia's proportion decreased from 21.9% in the previous period. Both Nvidia and Amazon are now among the top 10 holdings, as can be seen from the data. Next, let's move on to Palantir. Recently, when the United States stock market was falling, Palantir was one of the stocks that showed a decisive reversal. In response to Palantir's earnings, each institution's reaction was divided. As you can see, there were mostly negative reactions. Once again, it was confirmed that Palantir is popular mainly among individual investors. Now, I'll take a closer look at what opinions the major institutions have presented about Palantir. The most bullish is Goldman Sachs, and Goldman Sachs maintained its neutral investment opinion. The target price was adjusted upward from the previous $80 to $90. They kept their prior stance, which at the current price is around a 27% increase. This is a conservative estimate. The comments are important. With the entry of enterprise artificial intelligence, the United States government's expansion of technology investment, and the rapid adoption of generative artificial intelligence by defense, industrial, and manufacturing sectors, there is a positive outlook that the current high growth rate can continue. That's why the target price was raised, but even so, the current valuation is just too high. Therefore, they are not recommending a buy, but rather maintaining a neutral stance. The second is Center Picture Genamdo. The investment opinion was also maintained as neutral. The target price has been raised from $98 to $110, but the current price is still more than 10% below that, so that's how you should look at it. If you look at the comments, companies in the global industry are continuing to invest in order to improve business performance and operational efficiency by using artificial intelligence, so the comments are generally positive. Even so, the target price is still lower than the current price, so that's how you should see it. Morgan Stanley maintains a neutral stance, raising the target price by 10% from $90 to $98. Even so, it could still be around 21% lower. That's how you should view it. Compared to the expected 2027 free cash flow, the current valuation is still high at around 95 times. Therefore, it's better to wait before entering further. Waiting for a better entry point is quite reasonable. But the problem is, usually when you wait for a better entry point, it's when the upward momentum is already strong, and that's when you end up entering. We're likely in a period where the correction is intensifying rather than the rally, so waiting for a better entry point could be wise. However, the duration of this delay is something to consider. Next is Microsoft. I'm holding the stock, and my target price is between $80 and $94. However, it has also risen by 24%, which is worth noting. Despite that, actual sales in 2026 are projected to double from current levels. So it's not PSR or PER, but a PSR of 60 times cannot be justified. That's the main point here. Deutsche Bank is also holding on to its shares, and the target price is set between 50 and as high as 80. Despite the potential for a 35% drop, they continue to warn that the valuation could reach up to 57 times the 2026 sales outlook. RBC is maintaining a hold rating, but their target price is set at $40. They're saying that the downside risk is 70% and that it could fall even further from here. If you look at the comments, people are saying that the government is actually supporting growth and that there are a lot of questions about the separation of business and products, but it's hard to agree with these comments on a personal level. First of all, there are questions about product differentiation, but product differentiation is actually being done very well. So how can you know that? Currently, the growth rate is close to 40%, and the operating profit margin is over 50%. Achieving both high profitability and high growth like this is impressive. Korea has a distinctive industry that should be assessed accordingly. So there are questions about product differentiation, which means this company's moat is a bit weak. That's how you should see it. Its growth potential is not that high. Right now, there aren't even 1,000 customers or client companies. So, I personally judge that having the potential to dominate a limitless market is a fallacy. Next is Jefferies. They are still maintaining their underperform rating. The target price of 60 suggests a substantial downside from the current price, indicating a potentially negative outlook. They explain that the reason for this is the sluggish valuation, with only a 56% increase in sales expected by 2026. From the perspectives of both sides, there is a rather negative view. The first is from Rio Capitat. They are keeping their buy rating and have raised their target price from 125 to 130. If that happens, it means the current stock price could rise by more than 5%. While the enterprise artificial intelligence market is growing, Palantir is maintaining its unique position as a category leader. As I mentioned earlier, the number of current customers has not yet reached 1,000. Therefore, there is still a huge number of companies that could potentially purchase Palantir's products in the future. This is the first one, and the second is that it is a unique position as a category leader, a pure-play company. Let me confirm it once more. This is Wedbush. Wedbush is also one of the few institutions that consistently presents positive opinions on Palantir. The target price has been raised from the previous 120 to 140. This implies there's around 15% potential gain from the current stock price, which is one way to interpret it. Based on the comments, people predict that trillion-dollar industries will emerge within the next 3 years, reflecting their optimistic outlook. Li Yu says that NVIDIA is the core stock of the generative artificial intelligence theme. Currently, Palantir's market capitalization has not yet reached $300 billion. The reason is that over the next 3 years, the stock price could go up more than 3 times. That's why there's such huge anticipation. Lastly, I try to be as objective as possible and set aside my personal opinions. At the current market price, Palantir's stock is a risky investment due to its high valuation, in my opinion. And the reason why Palantir's valuation has remained this high is because this company is a unique business. What does it mean that Palantir is a monopoly? Up to page 83, we can confirm this from the official report. Typically, companies that grow rapidly tend to have low profits, while companies with high profits often see their growth slow down. So, it's rare to find a company that holds both of these characteristics at the same time. Among the few companies that do, one is Meta. Meta's score is below 57 to break down the 57-16% and 41%. If you add the two together, you get 57. So, even among the outstanding companies in the S&P 40 Meta is showing a relatively modest number with a score of 57. So, what about the current market? There are large companies whose sum of sales growth rate and operating margin exceeds 80, and there are 2 of them. One is NVIDIA, and the other is Palantir. And both companies maintain a unique position in the market, essentially preserving their own monopoly structure. For instance, NVIDIA currently holds a near monopoly of up to 90% in the artificial intelligence semiconductor graphics processing unit market, and Palantir is in a similar position. Because there is a difference in the value proposition, I tend to value NVIDIA higher among the 2 companies. That's why NVIDIA has the highest valuation among United States portfolio companies. However, for growth stocks, there are many cases where the growth premium was only sustained until growth decelerated. Amazon exemplifies past success. And the growth trend of the platform business has also slowed down. So until recently, the growth premium was maintained, but now it seems to be fading. For now, investors believe Palantir's value as an artificial intelligence beneficiary remains valid. When the stock price drops, it's actually more effective to buy more during those times when the risk is lower, in my opinion. Next, there was some interesting news related to Palantir that was reported recently. The chief executive officer of Palantir has continued to sell shares, citing the stock price increase as the reason, which is quite surprising news. First, let me briefly explain only the key points. Alex Karp, the chief executive officer, cancelled the 10b5-1 trading plan, which had scheduled the sale of up to 1 million shares on March 10th due to the sharp drop in the stock price. Initially, he planned to sell up to 1 million shares, but later cancelled the sale. In fact, between February 20th and 21st, he sold a total of 432,565 shares at an average price of $103.01 per share to pay taxes on vested RSUs. That means you can calculate that he sold about 446,000 shares. Now let's organize that information. Originally, he was supposed to sell about 100,000 shares, but he only sold 43,000 shares. Also, he didn't want to sell those 43,000 shares, but he had to sell them because of tax issues. That's how you should see it. The target stock price was expected to exceed 10 billion won before each sale, but in the end, it only confirmed 4.46 billion won, so not even 5% was sold. That's how you should look at it. Palantir's stock price peaked at $125 in mid-February, but dropped sharply to $75.63 by March 10th. It recently rebounded to $125.26, but dropped 13% to $107.30 after the announcement. So Alex Karp originally sold a lot of stocks, but now he has stopped doing that. Let me briefly explain what that means. Do you know who Palantir's chief executive officer Alex Karp is? Initially, he planned to buy 100,000 shares of Palantir stock, but recently, as the stock price soared, he ended up buying only 43,256 shares, which is less than 4.3% of what he originally intended. Well, that's what happened. Alex Karp personally decided to sell his shares as the stock price was rising, not just for tax purposes. If the Palantir chief executive officer waits for the stock price to rise, then the Palantir chief executive officer could sell his shares at a higher price. That's what this means. Therefore, the possibility of such a stock price increase is quite high. So I believe we need to wait for the stock price to rise. Palantir's momentum, let's keep watching closely. Out of the 26 indicators, 4 are for buying, 10 are neutral, and 12 are indicating selling. The stock price has dropped by about 13%, but the relative strength index is still at 55, so there hasn't been a clear upward trend yet. The 50-day moving average and the 200-day moving average are also providing solid support. Now let's examine the stock price chart. Palantir's stock price was consolidating, with the $126 range serving as a support level for some time. So, there was a strong resistance line here, and it wasn't easy to break through this resistance line, as you can see. Personally, I think the earnings performance was disappointing. Anyway, if you look at it, it seems like it's forming a double top. If we see another upward trend after a pullback, I'm wondering if it won't fall back again, or if an upward breakout is possible. Personally, that's what I'm expecting. Anyway, personally, I was waiting and watching, and there was one satisfying result. AMD announced its earnings. I don't own AMD directly, but I do have exposure to AMD through United States stock ETFs. So, if the stock price fluctuates significantly after the earnings, my portfolio is also affected. So, personally, I was really anxious as I waited for the earnings results yesterday. Fortunately, AMD announced strong earnings, and the stock price is showing an upward trend. Now, I'll explain the earnings results in detail so you can understand them better. As you can see, I recorded it step by step. A result surpassing the prior value. Let me briefly review the details again. Sales in the first quarter recorded 7.4 trillion won, showing a 36% growth compared to last year. The total increase in sales was 50%, and compared to last year, there was a 3 percentage point improvement. The business sector also grew by 2,139% compared to last year. Net profit was $709 million, which means a 476% increase compared to last year. Lastly, if we record net profit at $0.44, the growth rate compared to last year is 529%. Well, but this is already a strong period and it's officially recognized, but in cases like last year, it seems that one-time costs were very high. In cases like this year, it's more accurate to calculate the growth rate after excluding one-time costs rather than focusing on the strong numbers alone. That's my personal opinion. Now let's take another look at the annual basis. Total sales increased by 54%, a 2 percentage point improvement from last year, a significant jump. Operating profit rose 57% year over year, a positive result. Net profit also grew by 55% compared to last year, and net profit margin increased by 55% as well. So, overall, it was a very successful period with impressive growth. That's how you can see it. Now, let's examine the breakdown by division. AMD's sales are split into three primary segments. The first is the data center, and the second is client gaming. Client refers to personal PCs. Lastly, the embedded segment exists, with the data center and client segments being the most significant. Sales are growing rapidly, and the most crucial aspect now is the data center. In order for artificial intelligence Su-Hiju to succeed, the sales of the data center must grow. As you can see, sales reached $37 billion, which is a 57% increase compared to the previous year. Among them, AMD's EPYC CPUs and AMD's Instinct GPUs are showing remarkable growth in sales. They were the main driving force. The graphics processing unit also performed well, and thanks to the strong graphics processing unit sales, the data center segment recorded a remarkable 57% growth. The second is the PC market. Client game segment sales reached $2.9 billion, a robust 28% growth compared to the same period last year. Client game sales alone account for $2.3 billion. Compared to the same period last year, that's a 68% increase, but game sales actually decreased by about 30% compared to last year. As for game sales, new game releases have to come out for them to go up. It's important to take these parts into consideration. The guidance for the second quarter was also strong. Sales for the second quarter were about $7.4 billion, while consensus was $7.24 billion. They announced that total cloud sales would rise by around 43% according to their revelation. This includes a one-time charge related to inventory of about $800 million. So, excluding this expense, the total sales profit margin would be about 54%, similar to the previous quarter, so it can be confirmed that the profit margin has not decreased. Now let me briefly summarize. AMD has shown results that are outperforming the market consensus. Sales increased by 36% compared to the same period last year, recording $7.44 billion, and personally, I think that's a very good result. The reason is that the data center sales, which are considered the core business, increased by 57% compared to the same period last year. Kyung-Jin Ahn explained that AMD's data center sales surged thanks to strong sales of EPYC CPUs and Instinct GPUs. Personally, I think the most positive part was the rapid increase in artificial intelligence accelerator sales. AMD projected Q2 sales to range from $7.1 billion to $7.7 billion. The midpoint surpassed Wall Street's consensus, indicating a satisfactory earnings report, which explains the stock price increase. But even with such good earnings results, why is AMD's stock price like this? During after-hours trading, it's actually up by 1.6%. Personally, I expected that if the earnings results were good this time, the stock would rise by about 10%. So this time, I'll try to clearly explain the reasons why AMD's stock price couldn't surge despite the good earnings. Now let me show you the chart. Last month, the United States announced restrictions on exports to China. Because of this, AMD is expected to see a sales loss of about $1.5 billion this year due to restrictions on selling the MI300H. AMD announced it this way recently. However, last month they stated the sales loss would be around $800 million, but now it has risen to $1.5 billion, a significant increase from their previous estimate. The forecast for the second quarter indicates that data center sales are expected to decrease by approximately $700 million compared to the first quarter. In the market, the drop in AMD's sales is primarily due to export restrictions to China rather than concerns. This explains why AMD's stock price didn't fall significantly. But I think there is a positive side as well. The reason is, if you look at the guidance for the next quarter, the company actually raised its market outlook, and so did the guidance. Even though sales are expected to decrease slightly, the company exceeded market expectations. Currently, data center sales are robust, and many PC-related sales are also exhibiting steady growth, which is anticipated to persist. That is the projection. Now, let me summarize and tell you what I want to say in a straightforward way. The architecture was released in 2022. before artificial intelligence acceleration became an issue for most companies, right? The value of AMD's stock kept rising, and AMD's central processing unit market share was increasing. This is important because it didn't happen for nearly 3 years, or at least 2.5 years. When you invested in AMD, you anticipated it would become a significant central processing unit market player and boost its market share with competitive GPUs. However, few investors expected this, and their GPUs were still subpar. I wanted to highlight this fact. The reason is that when Intel's dominance in the central processing unit market weakened, AMD stock price rose sharply as it tried to increase its market share. Their central processing unit market share continued to rise as a result. The reason AMD's stock price continued to rise was because their central processing unit market share kept increasing. There was no particular interest in GPUs, and that's still the case even now. We need to keep this in mind. AMD's central processing unit market share has continued to show a steady increase up until recently. Now, let's take a look at the exact numbers. Now, what about the desktop central processing unit market? As of the fourth quarter of 2024, AMD's central processing unit market share is about 23%, which is a 5% increase from 18% in the same period last year. And Intel is still holding the remaining 77%. The PC central processing unit market is similar as well. As of the fourth quarter of 2024, AMD's desktop notebook central processing unit market share was recorded at 27.1%. In just 1 year, the percentage increased by 7.4 points from 19.7% to 27.1%. On the other hand, Intel still holds about 72.9%, maintaining its position as the industry leader. But AMD's rapid growth is clearly noticeable, and this part can be confirmed again. The data center central processing unit market is noteworthy, especially in this context. The reason for this is that, unlike the PC market, it is a growth market. So, growth is limited, and the market size can't increase dramatically. However, the data center market, due to the rise of artificial intelligence, has a much higher potential for rapid growth in scale. And that's why in the first quarter, AMD's data center sales grew by 57% compared to last year. In my view, there are two main reasons for this growth. The first is artificial intelligence acceleration and strong graphics processing unit sales played a big role. That's the first reason. However, there are CPUs in the market that are considered the best for data centers, and those are the EPYC CPUs. So personally, I judge that the expectations for EPYC CPUs are also growing rapidly. In conclusion, AMD is definitely benefiting from artificial intelligence. There are two main reasons for this. The first reason is that due to AMD's ecosystem, there is a limited supply of GPUs in the market, which increases their value. Currently, AMD's market share hasn't even reached 10%. But if it goes up to 20%, then graphics processing unit sales could double. It's competitively priced due to abundant resources. The central processing unit is the second reason. The data center market is growing rapidly, and even its market share is increasing. Therefore, data center CPUs, which combine the strengths of both, are also taking up a large share. Since it has both capabilities, AMD, which has both GPUs and CPUs, can be considered a beneficiary of the artificial intelligence boom. Today's final content is about today's United States stock market outlook. In today's video, the representative bullish investor of the United States stock market, Tony, is making an appearance again. Earlier, we looked at the rather positive market outlooks from Paul Tudor Jones and Scott S. But now, let's see what kind of outlook the bullish investor Tony has. I'll try to focus on the key points of his remarks. That's it for today's broadcast. If today's broadcast was helpful for your investment activities, please show your support by liking and leaving a comment. I'd really appreciate it. Let's keep investing in United States stocks together until the day we all retire. Have a happy day, and thank you.
Getting set for this week's Fed decision. Joining us now is Tom Lee, Head of Research at Fundstrat Global Advisors. And again, Tom, I'm not sure how you would characterize it at first. Maybe you were a little early on the stabilization, but then you pretty much nailed it. 2 weeks ago, you predicted the S&P's near-term low at 5,500. That level was easily reached today. Can you summarize what you've seen in the past couple of weeks and what you think has happened?
Tariff expectations are much better than what we saw on April 2nd. The markets that lead stocks such as credit, the VIX, and high yield are in a much better place. High yield has recovered almost all the widening that happened since April 7th. The VIX is a measure of the market's volatility. This is reflecting the market's rise. And the economy in 2026 is expected to continue as it is now. The economy continues to improve. Next year, the financial regulations. Next year, we will compare the revenue. Next year, we will compare the revenue. That leads to exports. We have upside to earnings growth. Born, Bibingo. Again, zeal is, of course, higher, but I do think the risk-reward is actually still positive here.
Yeah, I was thinking that too, that, yeah, we are. You're probably thankful and gratified that we're back to where we are. But it just seems like there's some backing and filling, that it's going to be happening before we break out to new all-time highs. Do you think with the tariff regime as it is, some of the comments made by President Trump over the weekend, that if these are temporary, why would anyone build a plant here so that some of them might be permanent? I still think it's negotiating. I'm still not sure. I take that at face value. But if the contract table continues in 2025 or 2026...
Yes, for me, this year, I think it's something I can do. One reason is that companies are looking for talent. That's what I think, and I want to give investors enough information. Due to coronavirus disease, 2019 businesses have suffered, and companies are facing economic difficulties. Inflation has risen, and the Federal Reserve has responded with the fastest rate hikes. So I think this table's impact is temporary. I believe the interest rates will be as expected. And then I have Tesla, MAG7, Bitcoin, and so on. They repeat again. In fact, Bitcoin is scheduled for February 2nd. So Bitcoin needs to recover near the S&P 5,800 level, and that's still being maintained here.
Yes, that was another question. Connected with gold. In the process, whether it's a good question from several people or a precise question in the information next, the inflation, even if I don't even know if it's about prices, I can't say for sure, but today inflation is the most important. It's recorded, and when we look at the data, we can see it. It seems to be repeated. The offset inflation is, since it is more important, what should we do?
Is that right with you? I agree. The two main... Inflation should be, as you said, something that will ease soon. That's what I said. The job openings and labor turnover survey data from the market shows that the job market is not that strong, so it does not reinforce inflation. The inflation data has been revised lower than expected. The Federal Reserve is waiting for the table. Jonyun European Central Bank ng tablet inflation I Eurobe o lagalsurok. Eurobe o lagalsurok. European Central Bank EUE. Gunsang Harmonized Index of Consumer Prices excludes food and energy. The bank sets interest rates through inflation calculations. It's low, but the procedure is about 225 points lower than Europe. I'm worried about excluding the procedure right now, and I think I might be able to save money. Not knowing the result.
Thank you for inviting me to this seminar. Thank you for that.